I want to talk to you as an investor because you own GE. We talked to Larry Culp and he said part of the benefit is for investors so they can focus as well on which line they'd like to be invested in. As you look at this breaking up of GE, how do you analyze it?
Well, I just want to set the stage that we may be one of the few who are analyzing it. GE is absolutely hated by investors because of the damage they've done. If you think about it, David, to today, if you go back, so the last 5 years, the annualized performance of the S&P 500 has been 20%. So that's 20% per annum on average. The comparable number for GE is negative 13%. GE has been a disaster. So Larry Culp's arrival in October of 2018, he had his work cut out for him, and he's very incentivized financially to get it done. But the two great businesses there were aviation and healthcare, and then power, renewables, and digital weren't quite as good. The key was to set them free. There were some codependency because not only did power and renewables have some serious problems, but then we had COVID. So then what happens to the aviation business, this is aircraft engines, avionics systems, it grinds to a halt. So free cash flow collapses, and therefore the healthcare business had to support the other two. So what makes this announcement so interesting is that it may be signaling that GE is getting beyond its problems. It'll actually coming back into blue skies where the long-term care business that the company has that is supposed to pay people for nursing care and end-of-life assistance, that was GE stopped writing those policies in 2006, but it's been a huge financial burden for the company. Under-reserving has been a chronic problem. So this breakup, as it may, as Larry Culp noted in the video, allow these three areas to shine on their own. It may be signaling, according to our industrial analysts, that GE is not worried any longer about long-term care and that means we shouldn't as investors be worried, and that is a very good thing.
Yeah, it sure is, given the history there. But let's take those three lines of business because they're not breaking it all up at once. I thought that was important. I mean, the first they spin off healthcare, which you said that's the strongest one anyway. That's ready to go on its own. They're going to take another year on power to sort of get that up and running. It may need a little more help. And then you have aviation at the end. Talk about those three lines of business and their futures.
Well, the healthcare business is in very good shape, and GE intends to retain 19.9% of that business. Ultimately, that may be sold. That will end up, if this process continues to its fruition, in the aviation business, that stake. But that's 2023. So here we are, we're in 2021. There's a bit of a waiting time, and that means the stock may be volatile or it could be down. Who knows? Investors hate waiting, but it takes some time to do these tax-free spinoffs. And also GE is determined, and this was part of the announcement, to set these three areas off on their own at much lower levels of financial leverage. And that's really where the cash flow is so important. How much can the company generate? To get investment grade credit ratings for all three is going to be that's the serious effort ahead. So that's why they need time. There's 2023 and then 2024 for power and renewables. So we await all that information, but there's really positive signaling happening here. Otherwise, why would they announce it now? They would just continue to work on it and not let us know.
Yeah, Larry kept emphasizing three publicly traded investment grade companies. He's very proud of that they'll all be investment grade from his point of view, at least. Talk about power, which has also struggled, had a lot of problems, some residual problems with some maintenance contracts and things. What about keeping traditional power together with renewables? Siemens went a different way. They let renewables go off on its own, maybe a bigger growth thing. Do you think that makes sense? As an investor, do you look at that and say, yeah, that's sensible?
It is, given the mix that GE has. Renewables ultimately, as we all assume, will be the business that sustains in the future. But it was never really our preferred of their businesses, and we're glad to see it be set aside and spun off. The aviation and the healthcare businesses are far superior in terms of free cash flow generation. Aviation generated almost none in the downturn, and now is coming back. We think there's a normalized $4 billion of free cash just from that business. And if you wrap all of it up together and you think about it today, there might be normalized $7 to $8 billion of free cash flow coming from the sum of the three parts. That's something that no, I don't think GE has delivered for a very, very long time.
And Sarah, come back to you as an investor, because as I say, Larry kept emphasizing that allows an investor to decide which, if any, of these lines they want to play in. Is it more valuable to be able to pick and choose among health and power and aviation than to have it all lumped together and have to buy the whole package?
Very definitely. We as investors prefer that. And then we think about them, you want them senior managements of each, and they're not, Larry's, according to our industrial allowance, is the best industrial CEO in the country. So there's a lot right there. Him running aviation without any distractions, fantastic. And then there are two very skilled individuals who will be the CEOs of the power and of the healthcare business. But think about it, they and their team can be compensated on their own efforts without the distractions and or dilution of any other parts of the business. They can really focus. They'll each have their own individual boards of directors who can focus on that business. So yes, this is, given there weren't synergies, this makes perfect sense. And we expect the stock price to ultimately reflect this and be a very significant return for our clients.
Very quickly at the end, Sarah, is this the end of conglomerates?
Hard to say. I think they'll continue. There are plenty of them in Japan, for example, unless they're desperate, like Toshiba. They don't break up. But we're not patient as investors, and this is true globally. And when we see a company who, for example, if it's multiple being suppressed, we want them to fix it.